Great day traders, and you're watching the daily market review with me, financial analyst of Grand Capital Company, Sergey Lin. And our daily heading is dedicated as traditional to the technical analysis of forex majors. So let's start our review from the first pair. It will be pair intraday analysis of Euro and US dollar. So remains on course for weakness to the 1.3244 support area, following the break below 1.3366 earlier this week. A completed double top formation on the daily chart has a measured downside objective at 1.3246, and there is a technical downside risk as deep as 1.3138, without damaging the structure of the medium-term Euro uptrend. A recovery above 1.3356 would provide respite, opening 1.3384 and 1.3423. A weekly chart of Euro and US dollar trend is bullish. Next pair, intraday analysis of US dollar and Japanese yen. So the week's high at 81.66 is back within striking distance following Friday session's strength. A bull pennant continuation pattern has been completed on the 60-minute chart, projecting further gains to 81.81 and 82.33 on concerted US dollar strength. Only a setback below 81.15 would question the US dollar bullish outlook, exposing 80.83. Weekly chart of US dollar versus Japanese yen trend is bullish. Okay, next pair, intraday analysis of Great Britain pound and US dollar. The Great Britain pound uptrend will remain intact, while projected support at 1.5894 holds. The recovery of Thursday's low at 1.5897 is expected to edge back up towards Wednesday's 1.5991 high, and the fresh wave of Great Britain pound bull pressure would force a break higher towards targets at 1.6049. and the double bottom measure objective at 1.6111. Failure to keep projected support at 1.5894 intact would damage the structure of the uptrend, leaving Tuesday's low at 1.5801 vulnerable. Weekly chart of Great Britain pound versus US dollar trend is bullish. Next pair, intraday analysis of US dollar and Swiss franc. The key resistance area at 0.9088 remains under threat. As US dollar bulls holds on the week's gains, a push above 0.9088 is required to give US dollar bulls some control over the short term, opening 0.9114 and 0.9149. However, the broader bear wave will remain dominant, while projected resistance at 0.9187 caps. A setback below 0.9021 would turn the near-term US dollar bearish, exposing 0.18775 and threatening the February 24th reaction low at 0.8931. Weekly chart of US dollar versus Swiss franc trend is bearish. And last pair for today, major will be Australian dollar and US dollar. So what I have here, the recovery of Wednesday's low at 1.716 is tackling resistance at 1.825. This 1.825 area is the last line of defense, protecting the week's high at 1.857, and longer-term Australian dollar bulls are still on course for the Fibonacci resistance cluster that closely straddles the 1.10 level. Failure to break through 1.0857 would prompt a setback towards 1.0716, but only as a part of an Australian dollar bullish continuation pattern. Weekly chart of Australian dollar versus US dollar trend is bullish. That's all, dear traders, for today. It was me, financial analyst of Grand Capital Company, Sergey Lin. I wish you the fair trends and spend a brightful and memorable weekend. Goodbye and good luck.